Credit Suisse Group AG and a former employee were found guilty Monday in a Swiss federal criminal court of helping a Bulgarian crime ring launder money related to cocaine trafficking. The court found Credit Suisse didn't do enough to prevent money laundering by members of the crime ring, which prosecutors said moved tons of cocaine into Europe and washed millions of dollars through Credit Suisse. It fined Credit Suisse around 2.1 million and ordered it to pay around 20 million to the Swiss government. The former employee, who prosecutors said regularly accepted suitcases of cash from one of the ring members that went beyond allowed limits, was given a 20-month suspended sentence. A person from another bank and two members of the crime ring were also found guilty of money laundering charges. Credit Suisse said it would appeal the decision and noted that the alleged offenses date to more than 14 years ago. It had said it was astonished to be charged when prosecutors brought the case in December 2020. The bank on Monday said it is continually testing its anti-money laundering framework and has been strengthening it over time. The former employee's lawyer said she wasn't sufficiently trained by the bank and will appeal. The court said Credit Suisse made it possible for crime ring to launder money through the bank between July 2007 and December 2008 by failing to adequately monitor its accounts and make sure the business complied with anti-money laundering rules. The crime ring allegedly recruited Bulgarian wrestler and others in his orbits of operations transporting drugs and laundering money. Credit Suisse had argued that prosecutors were alleging deficiencies based on rules and principles that didn't apply at the time. The bank said previously that outside lawyers and consultants had reviewed its system against money laundering and found its organizational setup was correct and appropriate. In the period being probed, prosecutors initially charged the bank with deficiencies between 2004 and 2008, but had to narrow the time frame because too much time had passed. The conviction hits Credit Suisse as it tries to turn a corner on financial losses and other scandals, including more than $5 billion in losses related to the collapse of family office Archegos Capital Management. Wow. Just reading. Consumer staples shares are bright spot. Here we go. Almost everything has fallen in the stock market this year. Consumer staple stocks are bucking the trend. Shares of companies selling staples such as beer, chocolate, and canned soup have raced past the broader market in 2022. Molson Coors Beverage Co. is up 19% for the year, while Hershey's Company has risen 14% and Campbell's Soup Company has gained 11%. That is compared with the S&P 500, which has fallen 18%. Consumer staples companies are commonly regarded as a haven during volatile markets and recessions. Investors often buy shares of companies that sell these day-to-day household goods for their strong dividend yields and steady business. Shares of staple companies trailed well behind those of technology companies the past several years, but investors wary of decades-high inflation, tightening monetary policies, and a potential recession are taking another look at the group. The shift over the next quarter should be to be more defensive, and Justin Bergin, Director of Equity Research at Ameriprise Financial, in bear markets, it's a portfolio that loses the least is the winner. In bear markets, it's the portfolio that loses the least that is the winner. Mr. Bergin said the firm is still overweight shares of technology, financial, and healthcare companies, but is considering adding exposure to more defensive sectors like staples. He noted that staples companies have had nearly unchanged, albeit lower profit margins for the past decade, making them relatively stable investments. It's steady, it doesn't change, it's a good place to kind of hide out, he said. Some analysts believe consumer sector companies, especially big box retailers, may be able to hold up better than other industries in the short term as costs for things from labor to fuel rise. In the near term, having the staples part of the market, it's an important part. Love you guys. Subscribe.